All right, welcome to the show, an Ontario show about all things property, be it real estate, personal assets, family assets, businesses, anything with tangible financial value. My name is Kareem Hazime. I'm a Toronto lawyer. I've been practicing for 5 years in the realm of property law. I'm joined today by my co-hosts, Andrew and Patrick. Why don't you each introduce yourself?
I'm Andrew Gomez. I'm a mortgage agent level 2 at TMG, the mortgage group. I have been doing mortgages for about 8 years, previously working with one of the big 5 banks and before joining a brokerage. Patrick?
Oh, lovely. So I'm Patrick Greshchuk, also an Ontario lawyer. Been practicing for 5 years with Six Estates LLP, partner being Kareem Hazame.
All right, amazing. So today's episode is about first-time home buyers. What are some things first-time home buyers should consider when they're thinking about purchasing a residential property in Ontario? You know, what are some of the legal considerations, financial, insurance, mortgages, also practical considerations, with a little bit of tea at the end, a little bit of gossip, scandal. So why don't we first start off with the very beginnings? What's the first thing that people do when they want to buy a home, generally speaking?
The first thing that they do
Yeah.
is Google it, of course, but often enough I see that people get in touch with a realtor.
So, good you mentioned that because what we try to do with our colleagues, with clients, we try to tell folks who are buying a property how we can bridge the gap. The system here in Ontario is very fragmented, right? You see the realtor first, home inspector at some point later, lawyer at the very end. So, what we recommend, we say, okay, well, speak to your realtor, but have the realtor or the client get in touch with the lawyer as well. We can provide 2 cents, not a legal opinion, but we can generally have a conversation with the client. Ultimately, our goal is to find out why the client is buying the property, what they're looking to do with the property, and before they put in an offer, once we understand their overall needs and wants with respect to real estate, we're now in a better position to structure their agreement better, recommend do's and do nots, so to speak.
That was something I actually found interesting when I began working with you guys, is that introducing the client to you earlier on in the process was actually a crucial step that I think I've found most have overlooked in their home buying process.
Why is that? Why do you deem it as a crucial step?
The more information that they have, the better ability they have to make a decision throughout the process, right?
Yes.
And there's a lot of considerations that are beyond my scope, definitely beyond the realtor's scope, that often enough come up moments before closing without enough time for the clients to change direction or reconsider their overall plan.
True. That's very true. In fact, we see that actually in my line of work, I see that a lot of clients don't know or don't realize that you can also have your lawyer review your agreement of purchase and sale. Obviously, the agreement of purchase and sale is the starting point. It's the document that essentially highlights where the property is, what is it, how much are you paying for it, what the deposit is, who your realtor is, who the seller is, who their realtor is. It's basically the contract that once it becomes legally binding, it's the starting point for the transaction. So most people don't know that you can have a lawyer review that, for example. They'll usually get their realtor to do it, which is fine. Realtors can do, obviously, agreements of purchase and sales. They're trained to do that. But, there's been several times in our practice where there'll be something wrong with the agreement, like the right conditions weren't waived, or the realtor did something wrong because, at the end of the day, unless your realtor is a lawyer, they're not legally qualified to give you legal advice as to the agreement. So that's one thing we'd suggest clients to do, is get your lawyer involved at the very beginning. Give them a copy of the APS, so to speak, and keep them clued in along the way. I mean, we've seen it before too, where somebody will come to me at the 11th hour, they're about to close. It's a long weekend too, so Monday is off.
Classic.
Right? Yeah, and or let's say there's an IT outage at the banks, which happened recently globally with the Microsoft issue. Some people had a closing on Friday. The bank is closed. What are you going to do now? You're going to end up incurring more costs. That's
Oh,
another
yeah.
thing that some first-time home buyers probably don't realize is that the price you agree to pay the seller isn't going to be the final price you actually bring to the lawyer's office. There's closing costs,
Yes.
right? And
Yes.
they'll come to our office and be like, "But I agreed to pay, hypothetically speaking, let's say 500,000 for this condo. Why am I now bringing you a check for 515 or 25 or whatever?
Right.
Obviously there's reasons for that." But going back earlier to what we said, get your lawyer involved from the beginning. Keep them posted along the way.
And that is key. We cannot stress that enough. So hypothetically, let's say a client is buying a property. They see someone else that wants to also buy the property. So instead of putting, let's say, an inspection condition in the agreement or a condition for a survey, they waive all that. They waive all that just so that they could, so to speak, quote unquote, win this bidding war and get the property, lock it in, have a firm agreement, and you go to a lawyer and you find out, well, what you want to do with the property, let's say build a pool or renovate the basement or add an additional unit or what have you. When it comes to us, and we haven't talked about it before, this is why lawyers getting involved in the beginning is key, because realtors can put in an offer, sign the agreement, but lawyers have to search title legally. We find out what's on property, what mortgage, what problems, your lot. We can search zoning, bylaws. We can look at the legal title infrastructure of the property, so to speak, what surrounds it. And let's say if you do want to build a pool, and we have no survey, right? Without a survey, we'll get title insurance, things that we cannot see title insurance will cover. We'll talk about that later, but let's say you want to build a pool and you did not put in a condition for a survey. We don't see the survey. Turns out there's pipes underneath the backyard, either gas, electrical, or what have you. Can't do anything about it, right? Can't build a pool, for example. That could limit your ability to build a deck or do other work on the property. Maybe it's not zoned for multiple units. So there are a lot of title concerns that go into real estate that clients don't think about. And when we have these conversations with clients a month later, 2 months later after they've signed, they tell us, well, I want to do X, Y, Z. We have to tell them, you can't, right?
Yeah.
We can only enforce what's in the agreement. We can only close the transaction based on what you signed.
Yeah.
So
Get us involved early
it
on.
becomes a problem, yeah.
That's very important. And what Patrick
Yeah.
said earlier, the system is pretty fragmented. So the first thing most people think of is like, oh, I need a realtor. True. I mean, you don't need a realtor. You can buy and sell residential property without getting a realtor involved.
Privately.
There are pros and cons to that. We will get into that later. But yeah, you'll need a realtor. You'll need a lawyer, and someone in insurance who can, give you home insurance, because most lenders will not give you a loan for your purchase unless you get fire insurance or home insurance, listing them as a first loss payee.
Yeah.
An accountant, preferably, if you work with an accountant, just so you can make sure your financial affairs are in order. Movers, if you're selling, stagers. There's a lot of personnel and a lot of different professionals that could get involved. So in a real estate transaction, especially if you're buying a home, so get them involved early on. Get them
Yeah.
involved early on. Don't wait till the end. Always expect to pay more than what you actually offered the seller, unfortunately.
Yeah.
Especially if you're not a first-time home buyer and you have to pay land transfer tax.
It's a hefty one. It's
Yeah.
surprising.
Yeah,
I
it is.
usually try to go over, I'll provide some sort of budget outline, including all of the closing costs and things like that. I always tell them, at the end, your lawyer will provide you with this final statement of adjustments. But this is to give a more realistic expectation. And most cases, people are really surprised with how much there is when it comes to the closing costs, land transfer tax, if they don't have a rebate on any of that, and then even more so if they happen to be in a municipality that has their own land transfer tax,
Like Toronto, yes, of course. Maybe it's worth talking about that a little bit. If you want to buy a home in Toronto, not only will you pay provincial land transfer tax if you're not a first-time home buyer, you also have to pay City of Toronto municipal land transfer tax.
Right.
And
Hefty.
I think I read also recently that mayor in Toronto also wants to increase property taxes. Either they've already done it
No,
or
they have.
they've already
did.
done
A
it.
lot of
They did.
municipalities this year
Yeah.
have increased property taxes in 2024. So usually the average that lawyers put on the closing cost for statement of adjustments over the last years, on average, 3 to 5% increase every year, right?
It's
Most
too
municipalities
high. Well,
increase.
I think is the
Yes.
consensus.
That's
Yeah.
that's the rate itself is actually lower than some of the other municipalities, but
Right.
because of the valuations in
Right.
Toronto being
Yeah.
significantly larger is really what impacts that. I mean, Hamilton happens to, I believe it was Hamilton I was looking at, happens to be one of the highest in terms of the rate itself, but
Yeah, yeah.
mean-
Hamilton was a joy to work with for the last few months. They were subject to a ransomware attack, right?
Re-
the
The
city.
city of
city?
Hamilton was
So
subject to a ransomware attack.
Every
I have no
time
idea.
in the
That's
last
some
few
tea.
months, it could have changed now. I think it changed now, but we request from the city tax certificates, right?
yeah.
For every client that comes to us that we purchase, we not only search title, we also request tax and at some points utility information from the city, right? That will prove to us how much they owe. Hamilton, they could not provide a tax certificate. Their response was, we are unable to provide a tax certificate, therefore use title insurance, inform title insurance so that they can cover potential liens and arrears that can form on the property, on title, because of unpaid taxes. So
So
it became a
that's
little bit of a,
That's another reason to get a lawyer involved early
Yeah.
on. You know, I mean, if you've already made an offer on a property and it's firm and you've already have a set closing date, you've made the deposit, everything's in order, you've started planning your life around that, moving and whatnot, budgeting, and then let's say the day comes and you're not working with a lawyer towards the end and they find out about something like that, a municipality that can't provide a property tax certificate. Maybe that would have factored into your consideration to even want to buy a property there
In
already,
a
and it
particular
could end up,
location.
it could end up delaying closing. You know, so there's a lot of things. Home inspections are important. I remember during the hot market in the early 2020s, a lot of buyers were waiving inspections on
inspection.
homes.
yeah.
I don't
big
know if that
problem.
was a smart
They
idea
were
or not.
waiving everything.
Waiving
There was
everything.
not a single
FOMO
condition on those
FOMO.
purchase
Yeah,
agreements.
FOMO, fear of missing out, is a real phenomenon.
Some have waived it, and we've seen that.
We've seen that.
Um,
What happens when they waive it and they discover there's some stuff the home inspector couldn't find, though? So, I mean,
Yeah,
even if you
yeah.
do have a home inspector, I think it's important to note that they're not going to be able to uncover everything. So, even if you don't waive home inspection and you get it fully inspected, what are some other things that might come to fruition or you might realize after you've already
That's
closed
right.
and you now own the property?
You and I had clients recently that conducted their home inspection at a later date due to timing and convenience, and they just somehow agreed to that after they've signed the agreement. Turns out there's mold in the basement. Turns out the entire garage has to be demolished. It was separately attached, detached from the property. Has to be completely demolished, and now the renovation cost to build a new garage to address the mold and what have you was what costing
Hundreds
them
of thousands.
180 to
The
100,000
garage,
estimate.
yeah,
initially,
it was a lot,
thousands.
and
Wow,
that
that's
was
a mess.
that was after getting multiple second and third opinions. Most of them, the consensus was the same. You're going to need a demolition job. With respect to the garage that Patrick
Yikes.
mentioned, if you saw a picture of that when they went to do the home inspection, you would have been taken by surprise because it was filled to the rim, and the inspector couldn't do an actual good job of inspecting the garage properly. You know, obviously, if it was
Mhm.
empty, they would have been able
Yeah,
to
they
do a
can't
better
do a
job.
proper walkthrough. They can't see everything that they have to see.
Yeah. So
they can't
inspect
even
it.
enter into the garage because of the
Inspect it.
clutter.
Not just with
Yeah.
your eyes, you know. So if you see a room or a garage that's, you know, anything like that that's stacked to the brim, and it's going to impact your ability to do a proper inspection, be mindful that there are defects that, you know, you might not realize until after you've
Yeah,
closed.
at the end of the day, listen to your inspector. If they caution you that they don't have proper access, they can't properly comment on this area of the home or what have you, then maybe speak with the sellers. Put that as a condition. Tell them you will not budge on that and you want to have proper access, so they have to clean it out, right?
Well, did something hold up that?
No, they
that
closed.
process?
They
Well, you know,
oh no, it held up because of the clutter in these locations
right.
and because of the late inspection.
Yeah.
But because of the client's desire to close, they waived the inspection condition. They deemed it to be good enough
Yeah.
for them purchasing the property, and turns out that we get a phone call 2 months later. Hey, this is an issue, right? It wasn't us who acted for the client specifically. We were involved in a different capacity, but they called us for an opinion as to what can we do. We're now being
who
quoted
called you
eighty to
guys?
$100,000.
The client.
The
So
client.
the
The
called?
client called.
The
Yeah,
client
sorry.
had
Yeah.
worked with another lawyer for closing, and they asked us for independent legal advice a couple of months
I
after they
see.
closed,
Okay.
because they bought a home in Toronto, roughly, high six figures. I think it was around 900 to a million.
Yeah.
And once they found out that they had to do a demolition job, that's essentially you're paying $1 million to get an invoice for 100,000. If you really boil it down
Right.
to what's really going on here. So yeah, I mean, in a nutshell, get everyone involved early on, not just your realtor, your lawyer, your mortgage broker if you're getting a mortgage, a home inspector. Have one on speed dial. That's very important.
I always found it interesting that that lenders don't condition an inspection.
They don't.
We have an appraisal most cases, and sometimes the appraisal doesn't identify things that the inspector does. So I always found that
It's
interesting.
curious, yes, because if the property is undervalued, that's a problem. Overvalued is fine, it's great. But
Wrong
if
market.
the bank is advancing funds for $1 million property, it's only valued at 800,000, hypothetically speaking,
Yeah.
then that is a problem. Your loan to value ratio is over the roof, and
What is that? What is loan to value ratio? Maybe it would help to mention
well,
in
yeah,
a
let's
nutshell.
Yeah.
I'll leave that to
To the
you.
mortgage
Yeah,
specialist.
the loan to value is the what percentage of the mortgage is in comparison to either the purchase price or the appraised value of the property. Typically, lenders will allow up to 80% loan to value. So if you have, let's say a $1 million property, you're looking at a $800,000 mortgage. Usually that's on a refinance, or if it's at purchase and it's under $1 million, you can do a high ratio mortgage as well, which means that the loan to value is over 80%. If you were, actually, the minimum down payment does change. I think that's also an important piece when we're looking at the down payment for the mortgage and the purchase. Sorry. When it's under 500,000, it's 5%, and then any parts over that up to $1 million is 10%. So, minimum down payment on a $500,000 purchase is $25,000. And then if it was a $600,000 purchase, you would take that difference between 500 and the 6, which is 100,000. Take 10%, so another 10 grand. 600,000 minimum down payment is 35,000.
Yeah.
It doesn't mean you will qualify for the mortgage. I think that's a very important piece.
Yes.
Which is, again, why we engage early in the process, ideally with a pre-approval and a rate hold.
So on that topic, when first-time home buyers are looking to buy a home, what should they have at their ready, so to speak? When they need to get a mortgage, what do they need? So that they're prepared, they can easily qualify to see if they can qualify for a pre-approval. What do they need to have or prepare or look out for when putting an offer on a property?
Yeah, it depends. It obviously depends on the situation, their type of employment, how long they've been there, how they're compensated through work. If they're self-employed, that changes as well. But generally, we like to see the last 2 years of your income history. That can be provided through T4s. It could be provided through your income tax returns as well. Normally, we would like to see a letter of employment, probably a most recent pay stub, and depending also at what stage of the process we're in. Ideal situation is everything is provided up front, because part of how we would like to work with clients is to avoid all the unnecessary delay and surprises in this already stressful process as
Yes.
they make their first home purchase.
Especially in a high interest rate environment too. I think it's safe to say that we're probably not going to be seeing less than 1% interest rates for a while, if
Absolutely.
ever.
They've gone down now.
Going back to loan to values, basically high loan to value, not good.
Higher risk.
Higher risk.
And it costs more money. I think that's also an important piece when it's when it's a high ratio mortgage, meaning less than 20% down payment.
So you own less equity in the property, and
Correct.
most of the ownership of the property is leveraged through by the lender, basically.
Correct.
You don't have as
Provides
much
more
equity.
risk to the lender.
More risk to the lender.
Now, let's say for sake of argument, the bank will not advance more than, let's
80,
say 80%.
80 usually seems
They
to
go
be
to the
benchmark.
maximum 80% hypothetically, right?
Yeah. We've seen
80%.
some of them at 90, but they're not that common.
Now, with the additional closing costs, other factors that play for the clients, let's say they need additional financing. Because we've seen those situations. Clients come to us, we receive their mortgage instructions. The mortgage instructions may have some conditions. Lawyer is to pay off X amount of debts, for example, in order
credit
to
card debts, tax arrears
That's right.
on a property.
That combined with your closing costs, which would include lawyer legal fees, land transfer tax,
Title insurance.
which it increases the higher the value of the property, the higher the mortgage.
The type of
it
property
scales,
too, as
right.
well,
It
whether
scales,
it's a
exactly.
condo or a freehold, for example.
A type of lender, if it's institutional or private,
private,
the
yeah.
price differs in scale. So it could be a few hundred, could be a couple hundred, could be $1,200.
We've
for
seen
example.
over 1,000 for
We've seen
title insurance.
1,500,
Yeah,
right?
For title
For
insurance?
title
For title
insurance,
insurance,
yeah. And-
especially for higher value
Yeah.
properties.
And
yeah.
some clients will be first-time home buyers, especially if they're not sophisticated real estate investors. They'll ask you, "Oh, why did you get me title insurance?" Well, I think maybe it would also be helpful to quickly mention why title insurance is a thing. So, what is title insurance exactly? Title insurance essentially covers you in situations where, after your lawyer did a title search to see what's going on with title, some of the things they couldn't find that don't appear on the title search should be covered for example, by a title
Yes,
insurance
It's
policy.
a very long
Yeah.
list, but it's very important to distinguish title insurance versus your home
Yeah.
or fire insurance.
So lenders
Two
will
different
ask you,
policies. Two different
yeah,
policies.
lenders will ask you to get home insurance or fire insurance. Obviously, if they're giving you money, they want to make sure that you're not going to burn down the house. Let's say you leave the stove on or something,
Right.
and then next thing you know, the whole house is gone. You don't have fire
I
insurance
should
on their
up
home
my fire
insurance.
insurance.
What the lender's going to be SOL pretty much, you know?
Right. So it is a very common question. A lot of clients do not know the distinction. When we say home insurance or title insurance, they think they're home insurance, and they say, "Oh no, Patrick or Kareem, I've given you my fire insurance policy.
Yeah.
You have it." And I would say, "Yes, great, you have it, but we need to also order title insurance that's covering you, the homeowner, and the lender." Now, to qualify, lender title insurance almost always required by all lenders.
Almost always, yeah.
100%.
What is the alternative to title insurance?
So for lenders, they usually will instruct to get title insurance to protect the lender. So a lender policy. There's two different policies we can order
For title insurance.
for title insurance. One covering the lender, so lender coverage. One covering the homeowner, so owner.
The
coverage,
buyer,
the buyer.
basically, yeah.
Lender, it's based on the bank's instructions. If they say get title insurance based on the pre-approved companies, if it's Stewart Title, Chicago, or whatnot, great. Owner policy, it's not required for a lawyer to close,
Legally speaking, it's not required.
Right.
But what is the prevailing practice in Ontario?
which have, so for, I'll talk about
It's
our
about to get-
perspective.
It's about to get
Every
juicy.
lawyer is a little operates differently, and it depends on their practice and risk factors and advice to the client. I'll comment on our practice. So our office always requires owner title insurance policy. We will not close your transaction on an owner's opinion just to save a few bucks.
Solicitor's
That-
opinion
that's good
Yes.
to know.
is
I
the
actually-
alternative to title insurance.
Yes.
So maybe it would help to discuss briefly what the difference is. So lawyers who are getting you title insurance for you as an owner, as a buyer, not for the lender, can either choose to buy title insurance on your behalf, and then they bill it later as a disbursement. It's part of the check that you bring to the lawyer's office when you're closing for the
Yeah.
proceeds.
Yeah.
Or the lawyer could give what's called the solicitor's opinion, basically saying, I've reviewed, I've searched your title, I've reviewed done my due diligence, and here's what I suggest, here's what I found, in lieu of getting title insurance. Now, the vast majority of lawyers in Ontario will not do a solicitor's opinion because it's too much risk for the lawyer.
They're pretty much
Especially,
taking all the risks.
especially when there are insurance companies willing to provide title insurance for a few $100s or maybe up to 1,000, maybe 1,500, depending on the property.
Right.
The buyer can get peace of mind, and the lawyer can go to sleep at night knowing that they're not going to wake up the next day to a claim against them because
Yeah.
they messed up or they did something wrong. Next thing you know, they're being sued or there's liability
Right.
insurance is getting
Someone
involved.
is
So-
refinancing their property.
Yeah.
Not
yeah.
not only risk, it's clients. Not all clients. Some. This is only a small handful. Will say, "Well, I just want a lawyer's opinion because they want to save a few bucks." On the flip side, us doing all the searches that we need to do to provide you, more often than not, at least, to provide you with a lawyer's opinion, could be more expensive than
It
the
could be.
title insurance
Yeah.
policy overall, because we have to satisfy ourselves that you're having good and marketable title.
And it's too high of a risk too. Obviously, the riskier something is, the higher of a price it commands.
So we talked about title insurance, we talked about land transfer tax, we talked about lawyer fees. We have registration costs that lawyers pay, disbursements to the land titles to register the mortgage and your deed.
Banking as well.
Banking
if a
costs,
lawyer
which is
needs to
part of the
wire
lawyer
you-
fees and
Yeah.
HST and whatnot. That will account for the client's closing costs, right? And that will determine, based on what the bank is giving us, and let's say they give you 80%, based on all the other costs, your land transfer tax being the biggest, especially if you're not a first-time home buyer, which we'll talk about credits in a second, or rebates, you may not have enough money to close.
Yeah,
That's a
right.
possibility,
right.
which is why you should also get your accountant or your financial advisor involved from the beginning. Too.
Right.
Yeah.
And
yeah.
when we have a piece of paper in front of us a month later, we have a mortgage disclosure from the bank. They're giving us XYZ. After we pay off any conditions they have in the instructions from the bank, we factor in all the closing costs, the search costs. The client needs to close. They don't have enough money. So what happens sometimes, and this is quite common, more common than I want it to be, is they get secondary financing or support from a second lender.
Which is a problem sometimes. Why?
Well, it's a problem because, first of all, the first lender may not allow secondary financing. It's very clear.
Yes.
So even if we have an
Most
option,
banks.
a good second lender, a reputable lender, private company or individual, because we do know some lenders that we can recommend, or brokers who may know some short-term solutions for clients. We can't do that, and now we have to recommend to them. Well, no, the bank is telling us we can't have secondary financing,
Yeah.
so they now have
'Cause I
to scramble to
assume-
find that shortfall.
In that process, you will need to notify the primary lender at this point.
If we have no choice but
In
to
that
get
s-
secondary financing, and they
closing.
say no secondary financing, then yeah, that
The
becomes a
prudent
problem.
lawyer, yes, who is ethical and is following professional responsibility, will inform the first lender, which could compromise the deal, because then the first lender might pull out.
Right.
For sure.
So
And-
we mentioned disbursements. I do want to mention that they're not static. They are very much
Oh, yes.
dynamic, and they depend on the practice. I've seen some lawyers charge disbursements for paper clips
For those
and
for those that
staplers. I'm not even joking when I
for the
say
people
that.
that don't, let's say for the listeners, what falls under the disbursements?
So disbursements is just a fancy word for out-of-pocket expenses that the lawyer pays on your behalf, you being the client or the buyer in this case, and that they expect to be reimbursed on at the time of closing. So title insurance is a good example. We mentioned that. Banking, lawyer is going to be receiving. So basically, when you buy a home, you bring a check to the lawyer's office, and if you're getting a mortgage, the bank or the lender will also wire money into the lawyer's trust account. The lawyer will take the mortgage money that's coming from the bank or lender. Will also take the rest of the money that the buyer has to make up. Let's say, for example, they're putting a down payment or whatever. They'll bring that to our office. That check also includes closing costs too. It includes the lawyer's fee, includes title insurance, everything. Then the lawyer will, pull them all into the trust account, and then they will wire that to the seller's lawyers, basically.
Mm-hmm.
So most people don't know that you actually need a lawyer to buy and sell property in Ontario. You cannot buy and sell any kind of property in Ontario unless you have a lawyer. Lawyers have a monopoly over legal services for conveyancing of real estate,
Mm-hmm.
because basically only lawyers are allowed to have what's called a token. It's a digital token, a license basically to use Ontario's land titles and land registration system. Um, Not every jurisdiction is like that. I know in England, I believe in England, lawyers do not have a monopoly on real estate closings, purchase and sales. You can go to like an actual conveyancer, and they usually also tend to be realtors as well. They'll do everything under one house. But it's like that in Ontario. In a totally non-biased statement, I think that's the way we should be
That's
doing it.
the key disclosure. Yeah.
That's the disclosure. I'm
Yeah, not
definitely not
biased.
being biased when I say that I'm glad that lawyers have a monopoly. But because, when you're buying a home, there's a lot of risk involved,
Sure.
right? There's a
Yeah.
lot, not just you as a buyer,
Yeah.
but also the seller, the banks, all parties involved. So having someone who, is a lawyer who's trained to do this, who can exercise a high degree of judgment and,
Yeah.
is capable of critical thinking,
That's right.
and doing proper risk management is important to have,
Yeah.
Going back to mortgage insurance, when is mortgage insurance required? When we're talking about down payments and
Or why
the-
do
why or the prospect of
clients need
default?
mortgage insurance?
Yeah. Yeah. The
It's a significant cost, by the way.
Yeah.
It's, it's a lot
up
of
to
money.
up to 4%.
Yeah.
In most cases. So
How often do you see them?
in the current market, not as frequently, simply because when you're putting less than 20% down payment, the requirements to qualify for the mortgage tighten up a little bit. And that is in part due to the requirement of default insurance. Default insurance is what protects the financial institution because, as we had mentioned before, it's higher loan to value is a higher risk for the lender. And so default insurance is required whenever you're putting less than 20% down payment. And that can be, if your minimum down payment is 5%, the rate at that point is 4%. Then that gets put on top of the mortgage. So just for simplicity, if you were doing 5% for your 500,000 minus your 25,000, would be that 475, and then they would add 4%, which would just be pretty much almost no equity at that point.
Right. Yeah. That's an
You're
interesting.
about 1% equity.
That's
at
an
that
interesting phenomena. 99% loan to value ratio.
That's right. That's
so
right.
I think it's important to just also mention the psychological element with why having high loan to value is not good, because if you as a borrower and also as a buyer of a property own almost no equity, what incentive do you have to pay it back? We saw that a lot in the 2008 financial crisis. I mean, it didn't affect Canada as much as it did in the U.S., but a lot of apparently, anecdotally speaking, I've heard that a lot of these borrowers back in the day that led to the 2008 crisis, they had outrageous loan-to-value ratios on properties.
Yeah.
They had poor credit,
No verification.
no
of
verification of income. They
Yeah,
owned
yeah.
multiple properties with almost no down payment. 99% loan-to-value.
Yeah.
At that
yeah.
point, what incentive do I have to pay any of that back?
Well, I mean, you definitely want to keep your home.
Yeah, but I mean, on multiple
ideally.
properties that I own
Yeah.
that aren't my primary residence,
Yeah.
which
well,
was what the
there-
case was back then.
And really, the default insurance also has limited programs. Ideal situation is for the purchase of a primary residence, a place that you're going to live in. And then there are they have other programs for rentals, but that it needs to be two to four units. The other is a secondary home as well, but there are still requirements for down payment that change depending on the program that you're utilizing. So it's not entirely the same that you would have. Let's say you'd be able to buy a secondary or a rental property with less than 20% down payment. When speaking to that risk of the loan to value, the downside of that, and obviously it's a risk to the lender, but it's also a risk to the borrower as well, because we're now seeing situations that people that are leveraged too much. are in a position, let's say, where they can't afford the mortgage.
Right, because interest rates went up and property values went down.
That's right.
So now they own more money than they actually own equity in the home.
That's right. And then when it comes to a monthly budget and cash flow perspective, now that they're renewing into a higher interest rate, they're like, well, I can't afford this.
Yeah.
And what am I going to do? And so one of the options, usually the final option, is to sell.
Is to
If
sell,
the
yeah.
loan to value when you purchased it was, 99%, you have 1% equity, and now the value has gone down
Right.
even slightly.
Even slightly, yeah.
Minus your realtor fees and all of those things by the time
Makes
you
every
sell.
finance difficult, makes paying back the mortgage difficult.
You're left
You're
with
stuck.
nothing at the end of the
You get
day.
the variable rate, your payments could have
Variable
gone up
rate,
by $500,
yeah.
$600, depending, obviously.
Yeah. Hundreds.
I've seen
definitely, for
examples
sure.
of a few hundred, right, over the last couple
Yeah.
years. Those who were on variable, they refinanced into a fixed rate, but
I think it's fair to say if you bought in March 2022, you overpaid at this point.
Yeah,
Or
anything-
with benefit of hindsight being, 2020, you ended up, you bought at the very peak of the market pretty much.
yeah,
and
about
you're more likely than
2022
not,
is-
especially if you financed and you had a high loan to value, you're probably more likely than not to now owe more than what the home or the property is
Right.
worth.
not to mention that we were doing, people were had situations like that where they didn't have enough down payment, and so lenders at the time, this is not common anymore, but at the time, some lenders were allowing second mortgages up to 95%.
right.
Like,
Or I've seen over 100. They ended up owing that's equivalent to over 100. But I want to ask your opinion on this. I'm not sure if it's a new phenomenon or whatnot. Instead of traditional institutional lenders, a bank giving you money, you providing the down payment for a property, there was a bank or a financial institution or company, we'll have to confirm, that if you don't have enough of a down payment, they will give you 20%. They will help you with your down payment.
Yes.
And they're registered as a mortgage on the property,
And as a co-owner too, I believe.
not on title, but there's an agreement.
There's a co-ownership
Have you guys
Because
gone-
we've acted for clients who did just this for the first time a couple months ago.
Yeah,
And-
they help you get on the property ladder, basically.
Yes.
If you're
Yeah.
having money,
Yeah.
trouble
But-
coming up with financing.
Yeah.
The caveat to that is we had to speak with the client because they were signing a co-ownership agreement, right?
That's right.
So they have 30 and they have, the remaining percentage or what have you, or 50-50, depending on how much you need them to put on the table, right? For you to buy the home. They will advance a certain percentage. Let's say it's 50-50, for example, just
Yeah.
for this purpose. As long as you own the property, 5, 10, 15 years, from our experience at least, based on what we read, they will share in the sale
Mhm.
proceeds.
Mhm.
They
That's
will
right.
share in the equity in the future.
That's right.
You can do what you wish with the property, but they have an interest in the property. Have you seen this?
Is it becoming more common?
with your clients?
I haven't seen it.
It's interesting.
grow.
It
It's-
allows
It
folks
is a
who
solution.
can't
Yeah.
necessarily afford a down payment or save as much as
But I'll
they
tell you
want
this:
to,
when we did
right.
review the co-ownership agreement, it was lengthy, and there were instances, there were
Yes.
several, clauses in the co-ownership agreement that were obviously pretty onerous to the buyer, who's retaining this organization or company to help them with the down payment.
Yeah.
But yeah, that is definitely something we're seeing now. It's interesting to think
you
how
guys
much
have seen
more. Yeah, we've seen that. Yeah, we've had
Yeah,
a few clients
yeah.
who've done that. It's interesting, definitely, to see how much more a concept like this or new concept will enter our lives over the next few decades. Just because
Yeah.
home prices are getting more expensive, people obviously wages aren't accelerating or anywhere near what you need now to buy a home compared to 30, 40 years ago. So it's
Yeah.
interesting to see some of these more creative solutions to this issue
Yeah.
come to
new,
the market.
innovative, different, right?
The co-ownership agreement is not that new, but I think this institutional level investors that are
Well, no,
now
it's on a large scale. This was reported
That's right.
throughout various different news outlets in the city. That
Well,
we've-
it replicates the first-time homebuyers incentive that the federal government had actually stopped doing back. It was back in March 31st. I think they're no longer accepting new applications. Where if somebody was purchasing a property for their first home, they could bring a minimum down payment. As long as they can meet the minimum down payment, then there would be some level of supplementary down payment provided by government.
And they
the
stopped
government.
that.
And they stopped that.
Thanks,
But what
Trudeau.
happened? What happened? Well, it wasn't really an effective program because people don't want the government to own any
Right.
piece of their property, which I mean,
yeah.
and I understand, like, let's not get too much into the politics of
Yeah.
what's been going on, but what became of this is that there are investors that saw the opportunity and are now providing a similar structure, whereas, you know, there's the one I'm familiar with. I think there are a few, but the one I'm familiar with is Orboro. And Orboro,
That's
That's
the
one that
company
that's
that
one
we've
yeah.
dealt with
That's the
before,
one
yeah.
that we heard about.
yeah, and Orboro, I need to do a little bit more conversation with them onto the you know, the depth of the agreement itself.
Sure.
But on a high level, if you were to bring a minimum down payment, at least the minimum down payment required, they would provide up to 20%.
I think it's important to know we're not
Advocating
advocating
or
for our
promoting.
borough. We're not
Yeah,
promoting.
and
They're
we'll
not
put it
paying
in the
us.
footnotes
This is
there,
not the
Yeah.
long
Legal
legal
disclaimer,
disclaimer.
This is not legal advice.
This is not legal advice.
Just a generic discussion
Just a
about
general discussion. We are not sponsored by our
Yes.
borough.
That's
We just
right,
happen
that's
to know
right.
of them because we work with some clients who did utilize
Yes.
their services to get on the property.
It's just
line.
having a
And-
discussion on
I mean,
creative solutions entering into the market.
Very
to become
important.
First-time home buyers.
They're not cutting me a check at the end of this.
I should. Well, maybe I should
Yes.
disclose. I do have business relationships
Shall I
with
go run a
Arboro. Do
disclaimer
I
through
utilize
the-
them? I have not. But
They're
it
not
is-
paying you right now.
They're
to
not paying
promote
us
them.
for
Okay,
this.
good.
This is not
We
a
have no
promotion.
interest whatsoever.
But there is and you know, again, this is a high risk situation, and it's
It is,
a
of
case
course.
by case.
High risk, high reward, maybe? Who knows?
well,
There's pros and cons. to
Exactly.
stuff like
There are.
this, which is
Exactly.
important to again have a lawyer involved.
Yes.
Don't ever
Yeah.
sign anything without getting a lawyer. At the most basic level, get a lawyer to
Yes.
review the agreement.
Well, and that's important because think about it. You're buying your home, let's say for the first time, because we're on the topic of first-time home buyers. This will arguably be your biggest life investment.
For most people, it is.
For most people,
Yeah.
you're
Yeah.
you're putting a significant sum of money into this piece of property. Right?
Also, owning a home is a huge responsibility.
So why cut corners? Why waive certain requirements when they should be at the top of your priority
Exactly,
list, right?
exactly.
Why sign something or agree to something without fully understanding what it is that you're
consequences,
signing? Obviously,
yeah.
that applies to basically everything.
Anything.
Contractual agreements you can sign, but for properties, especially what we're just talking about with these lending solutions,
It's amazing.
speak
how,
with the lawyer, ask questions, ask 1,000 questions. We don't
Especially
mind
if you're
it.
paying a huge sum
right?
of money and it's something you're going to be using every day for the
Yeah,
foreseeable future.
right.
It's a big responsibility too. I mean, on that note, maybe it would
That's a
help
good
to
piece.
discuss the different kinds of property briefly and what the differences are. Like clients will ask me, for example, what is the difference between a freehold and a common hold? What is common hold? What is freehold? There's three main ways you can own interest in a property. What are they? Freehold, common hold, and leasehold.
Right.
Leasehold, those obviously is just a fancy term for lease, so you don't actually own the property. You're leasing it. You're renting it. You have a landlord and you're
That's
a
right.
renter. But the two main ownership types are the freehold and common hold. Freehold, you own the land, for example. With a common hold, you don't if it's a condo. With freehold, you don't pay obviously monthly condo fees because it's not a condo.
Right.
Condos obviously can be. I've had some clients or people that I've met in my life who think all condos are buildings or apartments, which is not the case. You can have a condo townhome.
Yeah.
Right.
That is definitely a thing. The idea, I guess, between the main real thing between freehold and common hold is when you buy a freehold property, like a bungalow, for example, or a two-story detached home, you're also buying the land that the home comes on,
Yeah.
and you're not paying condo fees. The reason why condo fees exist under common hold is because you're not buying the land, so to speak. You're buying a unit, a share. in the condo corporation, because a condo is essentially a corporation. There's an act behind it. There's a board of directors that pretty much decides what the rules are. There are officers which run the condo corporation, so concierge, people who work in janitorial
Right.
services.
And what does that equate to? Common expenses.
Common expenses.
Common fees.
And if you own
Yeah.
a unit, you're technically a shareholder. You get to vote in the annual,
Yeah.
whenever they have an AGM.
Appoint
or-
proxies.
yeah,
if you
vote.
want,
You can
yeah.
force a vote. You have a say in who you can get to vote for. People on the board of directors. It's essentially you're buying a unit or share into a company. Now, on that note of condo fees, why do condo fees exist? What's the whole point behind them?
Well, so the condominium, they will provide for different amenities, different utilities sometimes are included
Like what?
in,
What
in
are some of
common
the
expenses. Well, Kramer, you live in a condo.
I do live in a condo.
You
and
can
I,
give us a first-hand experience.
And-
I
and-
do not. So
Yes.
let's comment on
I've-
your
I've
experience.
lived in condos for a very long time. I've owned condos for a long
I think
time.
only condos.
I
you've
did
lived
live
in-
when I was a wee lass in high school. Back when homes were a lot more, comparatively speaking, affordable. My dad did
Right.
buy a detached home, so I did live in a detached home for a few years. This was a long
Yeah.
time ago.
But let's transition to adulthood.
Adulthood,
Yes.
I've spent it primarily in condo apartments, so buildings,
Yeah.
and they have condo fees. So basically, if you don't want to own a freehold and you have to do all the maintenance of the freehold, like let's say the yard work, having to worry about air conditioner and the water tanker and all that
Somebody's got to
stuff.
clean the pool. Right?
Somebody's got to clean the pool, the drainage systems. You could buy.
Change the filters.
You could essentially, buying a condo allows you to delegate these tasks to other people. So the trade-off is you pay a monthly fee, and that fee covers essentially all these tasks that you don't want to do that you would have to do in a freehold. So a condo townhome, for example, you'd have someone taking care of these, and in return you pay a fee every month. Now some of these fees, it depends on the condo structure. Like I lived in a building where the monthly condo fees covered all my utilities. I never had a separate utility bill for water or gas or electricity. I've lived in condos that my condo fees didn't cover that. Some condo fees will cover certain annual maintenance. For example, I lived in a building that would pay to have an annual guy come to your unit and do, HVAC maintenance or whatever, fan coil maintenance.
Nice.
I've lived in some condos that don't do that. The problem we're seeing now from a practical point of view with condos is the fees are way too high now,
Right.
especially in the GTA. It's akin to what rent was just a few years
So,
ago.
so what's the
Well, I
average
mean,
that
if it's not-
you've
if it's-
experienced since you've been living in condos for the last decade, 15 years? Since I've known you, you've been living in condos. From your experience, what's the estimate or increase for the
they always
different
go
units
up.
you've lived in?
They always go up. I've never once seen a condo fee announcement that went down ever.
Well, it also depends on the ability of the condo board and the way that they manage
How
it,
well
right?
they manage.
How
So
well they manage it.
poorly managed condos. I know. I'm not going to tell you where I live, but in my opinion, having lived there for a couple of years and a half, I don't think it's the best managed condo because the fees are very high per square footage compared to other units I've lived in, and that's usually a sign. Usually, like Andrew said, that it's poor maintenance,
Right.
or it's not efficient or properly fiscally appropriate spending with the annual
That's right,
budget.
yeah.
There's a lot of waste, inefficiencies. Let's say, for example, a board decides every condo, more or less, every other condo building has like a guest room that people can rent.
Yeah.
Let's say the board wants to renovate it. Depending on how they go about doing that, who they hire to renovate it, you could end up incurring a higher condo fee. There is another potential huge risk for first-time home buyers to know about condo fees.
Well,
Special
that's what
assessments.
I was going to say.
Yes.
A
Yes.
clause
Yes.
on that when you're purchasing, that's a must
So-
if you're buying a condo.
So
in my
all
opinion.
that to summarize, we'll touch upon more about the cost of the fees in general. Review the status certificate. So each condominium, when you're buying a condo, you know this, I know this, request a recent status certificate. Have the lawyer review
Who's reviewing
the
it?
status. Well, it will be a condition
Just the
in the
client.
agreement.
It'll be all right.
We would always recommend have a lawyer review it.
Yes.
In that window, that cooling off period. So what your realtor would do would say, okay, you have 5 days, 6 days, whatever the case may be, to review a status certificate.
This is after you made an offer
Yes,
on a
this is
condo.
a condition
Yeah. In the offer.
in the agreement. Yes, in the offer. So you've signed the agreement, you've given the deposit, but it's conditional upon that review. So any condition, you could put any condition in
Anything.
the agreement, and if you don't like the results within that 5 days, you've read it, your lawyer saw it, you don't like it, you can walk away and get your money back.
Now, just because you can put in
Not-
any condition
yeah.
doesn't always mean that you can get away with
That's
putting any
right.
Because sellers might be
That's
like,
right.
I don't want this as a condition.
Well, it's a negotiating power. thing,
Exactly.
right?
Exactly.
Negotiating
But I
tactic.
mean, it's important because if we're talking about, from the qualifying perspective with the mortgage, that increase, if there's a special assessment that gets discovered,
What is that, a special assessment? What is a special? Did we explain in a little bit more detail what a special assessment is? And how that could be a problem?
Right, so
yeah,
it depends. A condo, based on their overall review, budgets, and what's going on. So before we get into that, so we would see a special assessment possibly in the status certificate. So the entire, when this is requested, they always give us a large zip folder package. It's always online. It'll have condo
love large
bylaws,
zip folders.
declarations, certificates of insurance.
password?
They'll have a full disclosures of hundreds of documents that they give us, right? That you pay for, right? And the status certificate is that certificate of itself is usually what, a few pages, 4, 5,
Yeah.
6 pages, give
What
or
is?
take.
What are the main things
Right,
that you
so
find
this
in the
will tell
status
us
certificate?
a lot of things. This will tell us, okay, are you buying the correct units in the parking spots? Are they described correctly in the
Lockers,
agreement?
if
Lockers
it comes
too,
with
so you can buy a
lockers.
unit, a locker, and a parking spot. All of these items will have a separate legal PIN. So each property has what's called the PIN,
A unique number
Yes.
digit identifier.
which translates to property identification
Yeah,
number, right? And that's your that we can use to pull the history,
To do
the
the title
mortgages, who
search.
owned it, stuff like
Yeah.
that. So we'll see what you're buying. We'll see if the common expenses in the agreement that's disclosed, let's say if it's $400, for example, is correct, right?
Yeah, we see that often. Actually, on that note,
Yeah.
a client will send us the agreement of purchase and sale. That's usually the first thing we ask for when they retain us.
yeah,
And then the agreement of purchase and sale will usually say if it's a condo, what the common fees are.
yeah.
And sometimes we'll notice that it's a different figure than what's in the status certificate.
I think
So-
we ran into that.
Yeah,
in
so
the past with
yeah,
our
we
some
have.
mutual
So then the
clients, yeah.
client will ask us why are they different? Which one is binding? Which one is more accurate? Which one is the right figure? And it's the one in the status certificate,
It'll always be,
Yeah.
right?
not in the agreement of
Well,
purchase and sale.
Actually, the status certificate said, I've had a recent file that a status certificate said, let's say 395, right? Or 340, right? The condominium board did a special assessment and now it's 396, 40 something dollars increase, which was not disclosed in the status certificate, but we had to now ask the seller to give us the notice from the condominium board that they received. And that's the only document that we use to prove that it has in fact increased, because
and then you need to
every other
notify-
document said the lower amount.
And then you need to notify the lender, and we have to determine now if the
Right.
client still qualifies.
So instead of
Yeah.
340,
on those debt
396, it's not a significant sum, but it is a fairly decent.
Yet another
Increase.
reason why a lawyer should be involved from the beginning, because it could
There you go.
affect your eligibility to obtain a mortgage,
Yeah.
right? Especially,
It can
and you don't want to
impede
find this
process.
out toward closer to the closing date.
Well, I've had situations
Yeah.
like that, and luckily they were able to close, and we were able to figure out a way, but it involved a larger down payment
Right, and some people might not be in a position to afford a larger down payment,
for sure.
which
right?
again, all of these things can be dealt with not just in the APS by making sure you consult with a lawyer first. What are some of the conditions I should put into this agreement, but also
the purchase agreement.
the
you're
purchase
referring to.
agreement, but also it's part of being proactive and making sure that whatever solutions you're pursuing for your purchase are not reactive. You're not doing them because you found out about something after you've made the offer firm and you've paid a deposit, and now you might have to back out of the deal.
Right.
Because, going back to the status certificate, we mentioned that, okay, we can find out what the condo fees are in there. What else
Right.
can we find out in there? If the
Right.
condo is embroiled in any lawsuits.
That's right.
Yeah.
Well, it'll tell us,
That's a
good
big
one.
first
one.
of
That is a
all,
big one.
have they paid their condo fees? It'll tell
Yeah.
us if the current owner is in default, right? It will tell us, yes, if anyone has brought any form of litigation against the condominium corporation. This could include slip and falls. This could be anything that the condominium depending on the severity, may have to pay out a settlement. Again, it depends on the case itself. It will tell us full disclosure,
Everyone is
any
different.
judgments,
Each one is
ongoing
different.
cases, and depending on the severity, that could have a future impact on increasing common expenses.
Exactly, yeah.
The larger the payout, the higher financial burden on the corporation, and now they have to offset that cost. How do they do it? They do a special assessment. They increase
The condo fees.
the general common expenses, and they
Yeah.
allocate per unit accordingly based on size and what have you, and your fees can go up. It's
Which
always a
basically-
risk.
Which basically trickles down to what? You pay more money in the
You
long
pay
run.
more money, right?
Yeah.
Surprise.
That's usually surprise, surprise. That's usually what most of these
Pay
negative
more money
issues
and
are about. Paying more
yeah.
money
Cost
in the
more money,
long run.
Yeah.
So, in addition to all that, it'll still tell us what the budgets are of the corporation. If
If it's a healthy,
corporation,
is there
yeah.
enough money in the reserve fund to cover any
Surprise expenses.
exactly surprise expenses?
Right.
Because the thing is, again, we mentioned the condos are corporations because you're owning a share, you're owning a unit, so you have the right to vote, right? But that doesn't necessarily always mean that things are going to work out the way you want. So again, goes back to the idea that get your lawyer involved early on.
Yeah.
Get everyone, lawyer guys,
All
your
parties
mortgage guys,
involved.
all parties involved. early on.
So maybe we can. Who are the parties typically that would be involved in the process for?
Yeah, your realtor if you're working with one. You don't need
Yeah.
one, but it would help to work with one. A lawyer, you definitely need one. A lender,
Cut
obviously.
that out for the realtor partners.
Yeah. A lender, obviously, a mortgage broker of some sort, whoever you're working with if you're planning on obtaining financing.
Yeah,
you're
get
not
a
paying in cash.
pre-approval.
It's someone
Get
in insurance.
pre-qualified.
You needed someone in insurance for fire or homeowners insurance, title insurance. Your lawyer will typically do the title insurance for you. Mortgage insurance, if it's required, obviously, this is something that you could do through your lender. A home inspector. Also, we did talk about home inspectors and why it's important to have. Sometimes also you might want to look for a specialized home inspector. Yeah. Home inspectors' duties will differ between a condo. If it's a condo building, for example, or a home, a detached property.
Yeah.
We've mentioned some of these negative things with condos, but buying a freehold property isn't all sunshine and
Well-
daisies and rainbows.
well, no, it isn't. But because we're talking about condos and what you can and cannot do within a condo, and just to touch on that, some freehold properties, townhouses, could be property that's tied to a condominium corporation, right?
Yeah.
So you can have a townhouse, not necessarily a condo high-rise, where you're still paying common expenses for the surrounding areas, right? Or common areas that some folks may not be aware of, and they tell us, well, why am I paying $100 and something per month to the condo corporation? Well, because you're buying a townhouse that's tied to common land or areas, so to speak, right?
What townhouse are you finding that has 150?
No. Well,
You'd be surprised some of the things lawyers find in title search. I mean, all of this at the end of the day is important because when you're buying property,
these are not all accurate quotes, by the way.
No,
this is
no,
just
no,
fictitious,
yeah, for
made
sure.
up.
I'm
It could be
just-
$1, for example.
be
I'm just
$1.
using it for the sake of
like,
example.
wow, if the monthly maintenance is that low, I'm
well,
curious.
the condo market in
Buying
Toronto
it
is not doing
tomorrow.
good right now, especially if we're talking about micro condos.
Yeah,
That's one thing we're going to get into eventually under our scandal and gossip segment.
Micro
Micro
condos.
condos is a big
Yes.
one.
segment.
But again, going back to all of this, the reason why all of this is a consideration is because at the end of the day, when you're buying property, you want to make sure you get good and marketable title. No purchaser of a property is going to want to buy a property that has all sorts of problems on title, liens,
Right.
special assessments, unpaid realty, property taxes, security interests. So speaking of all of this stuff, it would help, I guess, to maybe transition into freeholds. So freeholds also aren't all sunshine and rainbows. There's a lot of maintenance that you got to do with a freehold, right?
Well,
that you don't
that-
do with a condo, like
That's another
roofs
piece.
have to be replaced every few decades, I think.
Yeah.
Gutters and drains have to be cleaned. You have a hot water tanker that you're now responsible for
Yeah.
that you typically don't deal with in a condo. You have your air conditioning. Speaking of hot water tankers and air
no
conditioning,
more notice.
no more security
There's
interests
notice
are
of
Right,
security interest.
right.
allowed in
So-
Ontario.
So let me paint a picture. This doesn't apply to just those who are buying, those who are already currently owning. Have you ever come up with a situation where someone knocked on your door, right? Dressed all nice and stuff, and they say, "Let me talk to you about your hot water tank," because we've had that, right?
Right. You live in a freehold.
Yes,
Yeah.
in a freehold detached older neighborhood, and someone walked up to our door and was dressed with their orange vests, right? They looked professional. They looked the part, construction hat or whatnot. And they asked, "Oh, can we just we're just inspecting air conditioning systems in the area and stuff like that. Can I just have a peek at yours?" At the time, we didn't think anything of it. Yeah, we should, sure, go, go ahead. I'll take you out back. So they saw, they looked at it. Okay, great. And they ended up telling me, "Oh, you know what? I actually work for this company," or I'm not gonna say which company or whatnot. "Oh, for this company, and we can supply you with hot water tanks, air conditioning systems, stuff like that. All you have to do is, sign this agreement, right? You pay a rental fee every month. All this sunshine and rainbows." But what they don't tell you at the time in the fine print, you sign all this, you go to refinance your property in 3 or 4 months,
Or
a
sell,
year,
or
sell it,
Yeah.
and you see this company had registered what's called a notice of security interest,
Which
or we
is-
like to say NOSI,
Which
right?
is essentially a lien. In
Yes,
a way.
and
Yeah.
we can't sell the property or refinance without dealing with that
With that lien.
specific notice of security interest, that lien, right?
What is that like? Is that a nightmare? dealing with
It
this?
was.
It used
Oh
to
my
be.
goodness, it
It
was.
used to
Yes.
be.
It used
So
to be. No
CBC
longer, yeah.
CBC Marketplace did an episode on this. They're great, by the way.
Yeah.
Again, they're not paying us to promote them or anything.
It's all right. We'll
Yeah.
put it in
Uh,
the. We'll
but
put it in the
basically,
footnotes.
so not only did they do, we've also had first-hand experience of that. We had a client a few years ago, who the father who owned the property signed a whole bunch of agreements with these hot water tanker
It was
rental
like
companies.
7, 8, or 9.
7 or 8, maybe I think it was
even
double
10,
digits.
Yeah.
So when the father passed and then the mother was disposing of the property, they couldn't sell the property because they noticed that there was like more than 10 liens on it. And here's what the real problem was. We quickly started noticing when we started working with this client, we're trying to call these lien holders to figure out how much money is owed on this hot water tanker or whatever. And
There's multiple liens on. a
there's
single
multiple liens, and a
property.
lot of these companies either don't exist anymore, like they went bankrupt and they went into receivership. They don't actually exist, or they do, but then it's impossible to get a hold of them. And the ones that you do get a hold of will each charge you their own fee. Well, the most peculiar one was a company that the lien was registered under their name. I think they had given the house, they put like a water osmosis filter, something fancy, and they slapped like a 4-figure lien on it, and then they went bankrupt. And then good luck trying to
Yeah, they
find.
no longer
we had
exist.
we had to contact the trustee in bankruptcy, which is another organization.
And they told us they couldn't
And
help.
they told us they
right?
couldn't help. Eventually, what we ended up finding out was this area was very ripe with fraud and scams, so much so that obviously CBC Marketplace did an episode on it. So
Right.
what ends up happening is most of these companies have the same address. They were in the same building.
Yeah,
It's very dodgy
very,
stuff going
very
on. And
strange.
the party that could discharge the interest, because you need to go to that party at the time, this was before the law changed, you had to go to the party and be like, okay, how much money do we owe you on this? Give us a discharge statement. And then you pay that
Right.
fee. It could be several thousand. They could make that fee,
Sure,
out
sure.
of their own whatever. And then they would go ahead and discharge it, even though they're technically not the legal owners of the lien. There were other companies that purported
Yeah.
to be intermediaries that helped you get rid of the lien, but they were also in on the scam.
They told us, you know what?
Big
The
scandal.
the notice we see, it's paid. The company no longer exists, but we can help.
For a small fee.
A nominal fee.
For a nominal
And
fee
do
of
you know what that nominal
$3,000.
$3,000?
Yeah,
That nominal fee.
a nominal fee.
$3,000 just to remove this lien.
Archaic,
right?
outdated lien that doesn't
Um,
exist anymore,
And
Yeah.
I've seen examples
Crazy.
where a client signed for a hot water tank.
Osmosis
Let's call, yeah, sure,
filter.
osmosis,
Whatever
some
that
sort
is.
of rental.
Yeah.
Anyways, years ago, this was 5, 6, 7 years ago, and the company registered that notice like 5, 6, 7 years later from when the agreement was initially signed.
Yeah.
So after that party sold, our client was purchasing it. We had to prove to them Well, no, our client, it's not responsible for this. This is a completely different owner. We had to provide them with agreements of purchase and sale for them to remove it. It was a lot of unnecessary work, but the company put that lien 6 years later.
And
Because
these are
they could, because the
consumer
contract
goods.
said it could be registered, just nobody registered it at the time, right?
And then the crazy part is that these tankers, whatever they are, these are just consumer goods. So when the government at Queen's Park, the provincial government here in Ontario, finally caught on, they passed a law recently basically saying, okay, they set a date, I believe it was sometime in June, saying once we get to this date, which we already have now
Yeah.
because we're almost in August, all existing security interests on any consumer good that's in a property that is on title can now be deleted by the lawyer acting for the owner of the
Yes.
home. So recently we
Nice.
got a client who was selling their home. They had such
Yes.
a lien on title. It was for a hot water
Well,
tanker.
well, we didn't even know about
we
this.
didn't even know about it, but
Um,
now it's not a problem anymore because the law was updated to keep up with.
Because before
Before you had to
could-
go to the lien holder,
Wow.
and some of them might be
I see.
bankrupt,
Right.
and
Yeah.
it's very dodgy. They buy out liens, and it's hard to get a hold of. You need to pay them thousands of dollars just so they could click a
Sure.
button on a computer.
Yeah.
Now the lawyer unilaterally can remove the lien.
A-
The
and-
homeowner will come to the
and
lawyer.
how good
Definitely arcade.
that felt.
It felt
when
so
we
good.
when we so usually when we receive emails to delete or remove something, we try to help the other side as much as possible, the lawyers and the clients, to remove expired interest, stuff like that. And when we saw the request, so it was sent by email after as a supplementary requisition, which is what the lawyers tell us what they want us to do with the property, remove mortgages, stuff like that.
Yeah,
Um,
requisition drives from
when
the
they
word
told us,
require.
"Oh,
Yeah.
please remove this because of the new laws in place." Oh, I smiled. I was like,
Yeah.
gladly, I will prepare this right now and remove it because we've had such terrible experiences assisting clients that, again, they're not all bad apples, but some of these companies, they started taking advantage of these
Yeah,
homeowners.
yeah,
This
yeah.
is exactly why this
Especially
was
when
in the news
they're
before, and
older.
it's sad to
Yeah.
see.
Seniors were affected
was,
the most by this.
yeah,
They put this big thing in front of them. Most of them are not going to read it, and it would say right there in the fine print they're going to
Yeah,
put a lien.
on page 8 or 9, somewhere in the middle. By the way, we're going to be putting a registration
Yeah.
on your property, which can potentially hamper or impact your sale, your refinance, or transferring title, stuff like that.
Yeah.
So that
So-
was a real problem, and I'm glad that that's one thing that we're able to address. So just to recap, things to consider: always involve all parties from the beginning: lawyers, mortgage brokers, realtors, people in insurance,
Inspection.
everyone. Always expect to pay more
Yes.
than what you're offering for
You're-
the property.
you're
Go through the
essentially-
closing costs, ask questions. Clients, feel free to call us and ask us for how much it will cost. Now, we'll tell you we can never provide you with an accurate estimate
Down to
because
the cent.
it depends on the property.
Yeah.
One thing to keep in mind are legal fees can be fixed. Some costs can be fixed. What is not fixed is the search costs. Every property is different. Keep in mind, depending on what you tell us you want to do with the property will impact the type of searches that we do or conduct on the property. The more people that are selling it that are on title, the more people we need to search, the more due diligence, the more investigations we need to conduct, so to speak, will increase the costs.
Yeah,
right?
so have everyone involved at the beginning. Always prepared to pay more.
Always prepared to pay more.
Always be prepared to pay
Yeah.
more. Insurance. Very important.
Yes.
Consider the different pros and cons of different kinds of property, condos.
And your budget, right? Can you afford to do this?
Yeah, can you afford
Right?
to
Can
do
you
this?
afford to
do
do
you have
this?
enough money saved up in case something comes up, whether it's a special assessment for a condo, whether it's a home that you bought and the inspector
or
wasn't
just
able.
for a rainy day, maybe
Well,
personal
even-
situations that impact your.
If you have a
Even
variable rate
that
and
point
interest
of
rates
the
go up.
with the that you had mentioned with the detached home, I've had clients that will say, well, I definitely want to buy a detached home. I don't want to pay a condo fee, but that condo fee should be considered still potentially in your budget as a savings because, like you said, the maintenance is no longer delegated to
Yeah.
other people, right?
And some
You'll need to take care
municipalities
of that yourself.
will ask you to do certain things that you have to. Like some municipalities will be like, you need to take care of your front yard, for example.
You
You
gotta
need to
trim the
budget for
yard.
that. So unless you lived in a condo townhome, there isn't someone doing that for you.
Right.
Basically.
Yeah.
That's just
Right.
things to consider. So yeah, now I think we should move on to
Our next segment that
yes.
we're going to be including in our all our episodes. What is the T?
What is the T? What are
Hmm.
bad things going on in the realm of real estate, especially for first-time home buyers to consider?
It's-
Well, what's one of the most common things that we see a lot at work, not just on a micro level, but what's also going on in the Canadian economy as a whole with
Right.
HELOCs,
Keyword mortgages.
mortgages.
Yeah.
What are
And-
people doing with HELOCs? What is a HELOC, first of all?
Home equity line of credit.
And what is that exactly?
And it works like a credit card. It's secured against your property. It's typically at a lower rate, and it's open, so which means you can pull money out of it as needed, and you can pay it off as needed without penalty. It gives easy access to funds and allows you to access the equity of your home. A valuable tool, I think,
For financing.
For financing, not necessarily on your when you're as a first-time home buyer, but if it is feasible for you, then it is a good product that you can put in place at the time of your purchase as well.
What is the T
yeah.
with HELOCs?
Yeah, tell us about it. You came across it.
We've seen this not just personally, but also we've heard it anecdotally from people on our network. There is a very big trend of daisy chaining HELOCs.
What
So-
is daisy chain?
What is daisy chaining
Hmm.
HELOCs? So
Listeners.
basically, in a nutshell, what this is happening a lot in the Canadian economy, especially in the real estate market. Let's say you have a property that's either fully paid off or partially paid off. You own some equity in it, a decent amount of equity. What you can start doing is you can start creating a chain of debt. So you can pull out equity from that one property and use it as a down payment on another property. And you could start daisy chaining a bunch of different debt instruments through different properties. And every time one loan is at maturity, you can pull out money from one equity and use that advance to cover the loan that's maturing.
Yeah.
And essentially it creates a chain, you're daisy chaining debt instruments, typically HELOCs, usually with the home equity line of
Right.
credits.
Yeah.
And it's become, it's an unscrupulous real estate practice. Now, what are some of the risks of doing something like that? Obviously, the pros are you can get money that way, but it's a high risk investment. So on a micro level, we'll talk about macro later, what are the main considerations on a micro level if you're daisy chaining HELOCs?
Well, I mean, from a seasoned purchaser investor, the problem that can arise is default, which can come into powers of sale, right?
When does default typically happen? External factors that are outside of the daisy chainer's control. We're in that environment now.
Right, right. Well, higher interest rates,
Lower property
lower
values.
property value, right, which will impact your loan to value ratios. If you end up selling your property and you the sale proceeds after paying off other debts are not enough, maybe even the entire sale value of your home will not be able to pay off your mortgage, right? We've had, I mean, it's rare, but we've had clients where the sale proceeds, it was a negative sale, was not enough to cover the payments of all the debts. And this usually involved properties that have a first mortgage being like a bank, a second private lender, for example. They're using up the equity to finance other aspects that they need of their life, whatever the case may be. But yeah, that becomes a problem. They can't pay it back. And the property now goes into default.
Default. And how do you, I mean, that's the last thing anybody wants to hear.
It
They can't
happens.
afford
It's
their loan
increasing.
anymore. It is
How's
increasing.
that for some
yeah.
tea?
It happens. Every time clients sign a mortgage, if it's through a bank or the clients come to us for independent legal advice because they're refinancing with a private lender, every bank, every private lender will always attach in the mortgage conditions what's called standard charge terms, right?
Charge means is another word for mortgage.
Right. So there are different numbers and whatnot, and this will tell you details about how interest is calculated and what your rights are in the property, what the rights of the lender are in the property. And this will say, well, if you don't pay us and it's been in default for X amount of time, we can now enforce power of sale, right? We can now force.
Which is a way of enforcing the mortgage.
Yes, you're forcing a sale of the property,
The property.
without the consent of the homeowner, or in this case, the borrower, right? It's out of their hands. Now they have time to pay it back. They have time to fix the problem, if you will. But
This problem
It's a pro-
becomes more profound if you've daisy chained a whole bunch of different mortgages
sure.
through different properties.
Pretty much, yeah. I'm seeing a lot of it. You just can't refinance anymore.
just
You
can't.
can't qualify,
Yeah.
and eventually you've eaten into the equity of your property. And
And this is at the micro level. Can you imagine how much worse it is for an entire economy at a macro level if now this is something which it already is, a lot of people are engaging in.
yeah,
Seasoned real estate investors, people engaging in speculative investments, using
Right.
micro condos in Toronto as a speculative investment, treating it like stocks or shares, for example.
yeah.
Next thing you know, which is where we are now, you have interest rates, variable interest rates. People can't afford paying back the mortgage. At the same time, property values are declining. All it takes is one property in that chain to go belly up, so to speak,
Yeah.
and it creates a domino effect, not
Well,
just to the person who owns them, but across the wider economy.
I mean, on the upside of things, if we're going back to first-time home buyers, there is a lot of buying opportunity right now.
Comparatively speaking, if you can afford getting
Again,
into the
of
market,
course,
yeah,
if you can
compared to a few
qualify,
years
if
ago.
you've been saving, but
Yeah.
this is again back to the point of getting your team, putting your team together, getting them involved early in the process, so that you can be in a position to execute. Because when the opportunity comes along,
100%.
you want to be able to take action, right? Otherwise, if obviously this is a long process, purchasing a home, and going through all the stages of it, you want to be able to have most of those pieces in place, so that when you do find that opportunity, you can kind of execute on all fronts, and have already made an educated decision on whether or not it's something that you want to even move forward with and that's feasible for you.
Exactly. So that's one example of T for first-time home buyers with real estate. What about with mortgages? What do you see happening a lot with? What do some unscrupulous clients ask you to do when they come to you for a
Or
mortgage?
not you specifically, but maybe down
But
the grapevine, what have you heard?
Someone in
Yeah,
your
I mean-
industry, or what have you heard?
Fraud is rampant.
How?
Yes.
Practically speaking, how does the fraud bit work?
There's many different ways that people do fraud. Non-disclosure is one thing. Hiding information from a lender in the process of the application.
Falsifying disclosure too.
Falsifying. Yeah.
Disclosure, just straight up lying.
I make
Definitely.
$120,000.
Yeah,
And what do you do?
When you work at
I
Walmart.
don't work.
that's right.
It's magic.
Yeah. Well, and then they put it on paper.
Not that there's anything wrong with working at Walmart, but if you're making minimum wage, how is your income per year?
$250,000 or etc. Again,
Yeah,
this is an exaggeration, but it's just the kind
Falsifying pay stubs, essentially.
of
Yeah,
asking you to
and
commit-
government documents.
Yeah. I've
heard
your
these stories before.
T4s, the income tax returns
Yeah.
on all levels, like the
That's
whole
right.
picture. I remember when I was working at the bank, I had one. Well, it wasn't one client. Somebody was referring clients to me, and this was discovered later. I could only do so much to try and determine, the accuracy of these things, and it was uncovered that they had brought in financial statements. They had brought in investment statements, all the pay stubs, things like that. Created websites. Had a phone number where somebody would actually pick up the phone
Really?
and answer. It's
Wow.
in depth. It's
This
organized.
sounds like a very sophisticated
So-
scheme.
These are big
At
operations.
that
sometimes.
point,
I was not aware of the whole hotline aspect. That's how you know it's
That's
legitimate.
Right. Yeah, because lenders and borrowers might not know this, but lenders will, in most cases, reach out to the employer to verify some of the
Okay.
details. So another thing,
if somebody picks up and says, "Yes, I know this guy," or
That's
this,
right.
this
He
pers-
does
person.
make
Yeah,
150,000 a
He
year
does
working.
and
make
for
half a
substantiate
million.
all their questions and concerns. So, we as professionals, so ourselves as lawyers, brokers, agents, and whatnot, we are gatekeepers, so to speak.
Yeah,
but
we
we can
are.
only do
Yeah.
so much to combat fraud or anti-money laundering and stuff like that. We don't have the resources to always make that determination or identify problematic clientele or potentially problematic clientele.
And it's in the interest of our clients, right? Like
It
again,
is.
all the things, you know, it's not to scare people into the entire process, but you know, there are risks involved, and no, we don't want to put our clients into
Of course not.
a situation where they're going to end up homeless, right? There's enough of that going around.
So, I mean, our job is work with our clients. We do ask the clients the question, hey, you're bringing in 170,000 down payment with closing costs and whatnot. Where is it coming from? Right? We have a duty
have
to
to
ask
ask
these
that
questions,
question.
but at the
Yeah.
end
Do
of
you
the
guys
day,
also ask that question?
We have
in
to.
your
yeah,
process?
we,
Yeah.
we,
We
we
have
do.
to.
We have
I
to
know the
find
lenders.
out.
We definitely
Sure.
look into 90 days of history.
But
at
even
the
but
minimum.
even we do. So let me give you an example. So we can only do so much, but pre-COVID, this was all folks were meeting clients in person. IDs can be fraudulent sometimes. We can't tell. We're not professionals. We can only do so much to check if it's valid. If the person comes in front of us and shows us these pieces of ID, everything else looks good. There are no red flags. What's the problem? Their names on the draft. What's the problem?
Yeah.
What happened during COVID time with lockdowns and whatnot? It changed the way lawyers practice, right? So a lot of lawyers are now practicing virtually,
Virtually,
and
yeah.
they've transitioned their entire practice from in person to only virtual.
There were virtual practices before COVID,
Yes.
but COVID accelerated
Exactly.
the
It was
virtual
a
from
silver lining, if there even is a silver lining from
Yeah.
this whole pandemic.
being more open to virtual representation
Right.
and working virtually.
So either some law firms shifted to only virtual, or they're now combining a combination of the two. So recently, this year, and obviously verifying your clients virtually, it's difficult and
own,
puts
yeah.
stresses on lawyers and law offices. So Law Society changed different rules as to what we can and cannot do and what we have to do should we only be representing a client virtually. So beginning of this year, January 1st, 2024, if a client is 5 hours away, they want to use our office, we ask them how they found us, but if they can only close virtually, then one requirement is that we must verify their IDs
using a software. There's
or
a software.
agents or what have you. But
Yeah.
yes, explain software. So
Well,
how does that impact the intake and opening a file for clients?
Yeah, so real estate is a very ripe industry for fraud, unfortunately. Very ripe, especially in a country like Canada where most of our economy is tied to real estate. Most of our GDP is
Most
tied
of
to
our
real estate. I
GDP.
believe it's also more than what America's was in the 2008 crisis when they had their housing crisis. Anyways, that is a different topic aside. One thing that lawyers now have to do ever since January of this year, 2024, is if you're meeting with a client virtually for the first time that you don't know, you've never met or worked with before, and they don't come into your office or you don't meet them in person, one thing that lawyers have to do now, especially for real estate transactions,
Involving money or any
Involving money.
transactions involving
where money is coming
funds,
into
yeah.
the lawyer's trust account,
Yes.
we have a duty now to use third-party ID verification software.
Or
Basic
third-party agents as well. But
third-party agents.
IDs
yeah.
is what we
The
software is what
the
we use,
software
yeah.
is what we use at our firm. Basically, you upload pictures of your IDs onto the software. You take a selfie, you fill out a preliminary questionnaire. Just who you are, what your date of birth is, where do you live. Then, depending on whether, let's say, if you're buying or selling and there's money coming to the lawyer's office, they'll also ask you to log into your financial institution's online banking. They don't
Wow.
take, they say that they don't take your personal information. They're not going to see what's in your bank account and whatnot. They just want to make sure you have a Canadian bank account
Yeah.
because
It's all encrypted, right?
it's all encrypted. You
It's-
can't buy or sell property in Canada without having a Canadian bank account. That's
Mm.
actually something most people don't know. So yeah, basically everything is encrypted and good to go, but this is something that we have to do now. And we've experienced kickback from some clients
Right.
who don't like doing that. They will drive several hours to come to your office because they want to circumvent having to do
Yeah,
it online.
yeah. You
And
mentioned that.
depending on the transaction, sometimes, so when we order title insurance, This is now so every different title insurance companies have now developed their own proprietary software to verify IDs, right? So if for whatever reason the file gets flagged and it goes to an underwriter, even if it's an institutional mortgage and everything else looks good, they may ask us to have the client complete the virtual identification link,
And if
even
they
though we saw
fail-
them in person,
And if they fail,
right?
they
then,
won't get title insurance.
well, they may not get title
Yeah,
insurance. It'll
which is
be
a
a little bit
problem.
more difficult to get title insurance, more disclosure and information to address these problems. But what these reports do is they verify two pieces of ID. They take selfies, biometrics, to see that they are who they say they are on their IDs and passports and driver's license, for example. It will verify multiple points of fraud if they have engaged or if there is any risk of fraud. And it will also look at over 1,000 points of any anti-money laundering, right? So it's they're changing the playing field for clients in virtual representation, but it's
It's a problem.
process-
it's a problem, and
It's a
some clients don't
problem.
like it.
It's a lot of risk, and it's going to cost you a lot of money. So, yeah, in a nutshell, things to consider for first-time home buyers. Get everyone involved. Always expect to pay more, and be aware that there's a lot of fraud and unscrupulous practices
And
happening.
ask questions.
Always ask questions. It's your money. Always ask questions.
That's right.
So, having said that, that's pretty much for today's episode.
Wrap up this today's.
I've been
episode.
Kareem Hazime. This is my co-host Andrew Gomez. Andrew Mortgages. Andrew Mortgages. Andrew
Maybe
Gomez.
key disclaimer, yeah.
And Patrick Greschuk. Thank you very much.